Hi, earlier this week, the government announced that we would all be able to take mortgage holidays if we were adversely impacted by COVID-19. And that's really important. You have to be adversely impacted by COVID-19. If you are in a position where you've been impacted by COVID-19, you can apply for a payment holiday from your mortgage provider. We can apply for a 3-month payment holiday, and this is going to be reviewed in 3 months. So at the moment, the government has said we should all get a 3-month holiday if we need it, and that might be extended to 6 months or beyond if we need that in 3 months' time. Now, in most cases, the interest will still be accruing on our mortgages. We also know that this has been extended to the residential buy-to-let. At the moment, it does not apply to commercial mortgages yet. Now, we've spoken to several clients who have applied for this, and a lot of lenders' phone lines are inundated with calls, so actually getting through is proving to be quite difficult. Now, some lenders, mine included, which is Barclays, have asked us not to apply by phone and have told us that we will need to apply online. So it took them a few days, but on Friday last week, they actually released an online form. So it's very clear you should only apply online, and you have to go through a bit of an application process. You should only apply if you are adversely affected. Now, what should happen is those 3 months holiday will then be added to your outstanding balance. So when you start paying your mortgage back in month 4, you'll find that your mortgage payment for month 4 is slightly higher than it was before the virus hit us, because your mortgage has been uplifted to recover the outstanding debt over the remainder of your mortgage period. So that's probably how most mortgage providers are going to spread that and lift it up and recover that over the remaining life of your mortgage. Gone are the days where they used to add it on to the end. I remember, way back when I took my first mortgage out in, about 1990. That was a recession hit us then. And at that point, I was able to put a payment holiday. I think I was about 19 or 20 then, super young, tiny little mortgage. And I was able to take a payment holiday when we hit the recession, and it was added to the end of my term. Now, I don't think that happens. I don't think that's going to happen. I suspect they'll just spread it over the remaining term and try and collect it back as quickly as possible. Although they'll be sympathetic to how difficult it's going to be for the majority of us to recover and get back financially. We're not all going to be in a position where we can get back to where we were before the crisis hit us. On month 4, it's going to take a while for us to build our reserves back and get back into the swing of earning money and having a business, if you are self-employed, of course. So I'm speaking for people like me who are self-employed, who are going to take a hit on their businesses. So that's the mortgage holiday update. Should be applicable to most people. We have had a couple of people who are in rented accommodation who have applied for a mortgage or a payment break on their rent, and have been told that they're either expected that if they're working, they're going to be able to pay their rent, or if they're not working, they're going to get 80% of their wages. Therefore, they're still expected to pay their rent. So we have seen a couple of rental clients, or clients who have that rent a property rather than have a mortgage on a property, whose landlords haven't been quite as accommodating as those of us who are buying are getting relief from our mortgage providers. So that's something to look out for.